All right, good morning, everybody. It is approximately 6:30. What is it? 6:31? 6:31 a.m. on Wall Street, 3 hours before the stock market opens. It's time to get your quant on, your macro going, and uncover the best fundamental investment opportunities across the global markets, stocks, commodities, currencies. Yep. My name is Wayne McDonald. I am the founder. I'm also a Harvard educated economist. I love economics. I love macroeconomics. I love trading. In particular, I'm a macroeconomic trend trader. So you need to know why the markets are moving, and that's what QuantBox does is automates all your macroeconomic analysis. Why don't you try it? It's $8 for a trial. Check it out. Look at all the pretty colors. You know you want it. With that being said, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Boom. Now, I will get rid of my camera altogether. I think that's best. Yeah, Jim's like, no. Anyways, we'll try this for a bit. Okay, yeah, let's get on to the charts. Well, first of all, here's the most recent video. I changed the color, some of the colors. Actually, it's not supposed to look like that. I did change some of the colors, just not to those colors. so, great. So let's log into the database. It's so funny. Why are they those colors? I don't know why. Hey, do boo boo. Let's go into the quant box. It's kind of like going to the Walmart. Let's go into the quant box, see what we got going. All right. Oh, and by the way, quant box subscribers, you are going to get a boatload of emails this week. I don't mean to spam you, but I have 18 updates to QuantBox that I need to share with you. And I'm going to release them a little at a time. Otherwise, it'll be like the rain in Orange County, New York last night. Apparently, they got 8 inches of rain. That's a lot for the Hudson Valley. I'm telling you, holy moly. So, anyways, I'll launch them. Well, you can kind of see one of the things already, huh? Okay, you see, very bullish and bullish, not buy, strong buy. That's bugged me since the very first iteration of this. Johnny's up there, yeah. Johnny's like crazy night, yeah. So hope you're safe and sound. So, anyways, taking a look at the charts here. One of the things I looked at is you want to see, are these going this way, are they going that way? And right now it just looks like a little of everything, and that means there's no trend in the moment. Okay, um that's that. That's that. No trend in the moment when you look at all the asset class. We'll take a deeper dive in a second. Like to remind you that you should, oops, where am I going? Hello. There we go. You should be looking at this over the weekend. It shows the flow of capital from institutional investors. You want to keep on week over week changes. Right now, you can see a lot of investors are long US dollar, and lots are short the Japanese yen. But we want to see these things moving around, right? Are they going left or are they going right? You can see there's a lot of bearishness now in the S&P 500. Why does it matter? Well, it's been going up and up and up and up and up. So this might say, hey, a small pullback could lead to a big pullback. Okay. Would you like it to be a little bit easier to see the week over week change in contracts? Yeah. So maybe you'll get an email about amazing new changes. In fact, actually, there's about all of this is going to be reorganized. And then there's two more little features that have been added to make you be able to see the relative change in two assets. So you can see why something has become bullish or bearish. So look forward to that email. This is going to get easier to read. Nonetheless, let's take a look at the scatter plot. Can you notice any changes here? I mean, you're still going to get an email about it. But first of all, there's a vertical line. I love the vertical line. So we have X and Y axes now. But I took a little poetic liberty here and I sprinkled a little bullish and expected, bearish and expected, bullish unexpected, bearish unexpected. Just little labels to keep your mind focused on what this actually means. Cool, huh? Yeah. I mean, so some of the updates are nice little tiny little, you know, lipstick on the pig changes like this. Some of the other announcements I'm going to share with you are massive. Like massive changes. So, anyways, so here's our scatter plot. And like I said, there are plenty of things that are as should be, and there are just as many things that are unexpectedly, let's say, bearish. I don't know if we should make a big deal about any of this yet. Um, Still early in the week. This is an important week. Going off the top of my head, we had soft data out of China last night. CPI, PPI. CPI was flat, PPI was down, so they're running into disinflation. I think we have Bank of Canada this week. I think we have New Zealand interest rates this week. We have CPI in the United States of America, and earnings season starts. So maybe that's what's going on here. But we also know Canada Day, which was what 10 days ago, can be a turning point in the marketplace. And we've discussed that a million different ways, but it might actually be happening. So I don't see a clear trend. Typically, I want to see everything right as rain, right? I want to see a line that goes from green to green, or I want to see a line that goes red to red on average. And I don't see an average thing. Okay. Again, one of the changes you'll see is it's bullish and bearish, not buy and sell. So, economically speaking, for example, you'll see euro yen bullish, CAD yen bullish, Swiss yen bullish, Japanese stock market bullish, pound yen bullish, Kiwi yen bullish, Aussie yen bullish. There's all these bullish or very bullish. Remember, this is comparative analysis between two sets of economic data. Doesn't mean that's what the market's doing. QuantBox measures macroeconomic data and then it compares two assets to each other. But it doesn't mean euro yen is going to go up today. It just means euro has advantages over Japan, the euro area, economically speaking. But this market can still be down on the, let's say, short to medium term. Yet euro yen is more likely to be bullish on the longer term. but never turn your back on the fact that euro yen could fall for 2 months and it doesn't change the economy of Japan, and it doesn't change the economy of Europe. You understand? So, that's why I was adamant with the developers, and they were kind of pissed because they're like, there's 1,000 different iterations where it says bullish. Well, go back and get going. You'd think you could just like click, 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 and they all change, right? No. So anyway, so no matter what happens, euro versus yen favors euro right now, but it can be falling. Take a look. I renamed this swing trade heat map. This will be one of the announcements. Let me expand this. And anyways, as you probably already know, instead of this being overnight data, this is weekly data. So, look at this. Oil now over the last 7 days has worked its way up 5%. Wow, what a great week, huh? So clearly some love going toward my oh my WTI. Biggest loser, UK stock market, German stock market, Japanese stock market. CAD yen has come down quite a bit over the last week. Aussie yen has come down quite a bit the last week. USD yen has come down a lot the last week. You see, yens. Yes, the how do you say, the economy shows yens going up, but currently the market shows yens coming down. It's important to notice the distinction between the economy and the market. Cool. So we could tie that in with some seasonality. But nonetheless, let's just go take a look at some of these charts. Start with some dollar pairs here. Okay, we have Aussie yen trapped. Okay, I'm favoring dollar strength. Now we had non-farm payrolls last week, and it was not red hot. I thought that was a little surprising. I did a little bit of research, and I thought it would be higher than expected. But that's that. I don't have to be right. So I just have to be lucid. So anyway, even though I favor dollar, that for many that could be like a risk on scenario, like, oh, the Fed doesn't have to raise interest rates as high as we thought, and that kind of thing. And but I would still favor this time of year some dollar strength. And so right now we have this thing where we're not really going anywhere, but down makes sense. Now remember that vertical line. Well, actually, the vertical line. Forget why that one. Oh, that's a 2155 cross right here. Okay, this is like the beginning of the second half. Forget all these other vertical lines; those are 2155 crosses. But what we're looking at here is the second half, and typically you see a little bit of that going on, and it's not really trades. It's not really people selling Aussie dollars. It's not people really buying US dollar. It's just that as professional traders and investors go away for the holidays, they're less likely to log in from the Hamptons and throw down another $1 billion onto a trade. Instead, what they do is they get out of trades, right? They get out of trades. And then when they come back to the office, then the new trades come back on. So it's just people getting out of the long trade. If this comes down, it's just the Aussie dollar long exits. So you bear that in mind. Just because it's if it goes down or up, it's not that someone is actually buying or selling. Very often, it's just people exiting trades. So there's the big news scalp from non-farm payrolls. Um, how many months have I taught this pullback extension trade, what I call a high volatility event driven strategy? I first taught this publicly 207 months ago. Huh? 207 months. You know how long that is? You can create a person that is independent ish. Yeah. Telling you can take a little embryo and suddenly, oh my God, it's driving you home from the bars. Anyways, that's 17 and a half years. I've been teaching that little trade. Look how amazing that little 50%, huh? This up and this down, okay, and up. So that's non-farm payrolls. And then we roll into the new week here and it just stops. Total fizzle out, huh? Welcome to the summer. So at investorbootcamp.com, we often talk about this time of year as shooting at rabbits. I think of it as two ways. A change in the market. So when I say change, kind of a counter trend. Not really, but kind of not even a fade, like a fizzle. Let's say the markets were bullish for months. Well, then you roll into this time of year, it just kind of fizzles out for 6 weeks or 8 weeks. It's not really a drop, but the up is gone, right? The other way of looking at it is instead of hunting caribou and elk and moose, you're spending your whole time setting up traps for rabbits because those herds are not even going to be around. So in game theory, if you spend all your time looking for the moose and you never find the moose, you die, you starve. So you're like, you know what? There ain't no moose. I'm going to do rabbit traps. And by the way, you're like, that's like the dumbest analogy I've ever heard. Well, I've done dumber than that. So excuse me. But the other thing is like in some of my Harvard classes where, and in fact, I did a class on specifically game theory. That was one of the games. So it was interesting, and I'm like, I know this game. Go for the rabbits. Go for the rabbits. So, anyways, it might have been my final examination too. Yeah, and one of the questions on the final exam had to do with cooperating with another hunter to get moose, or should you just go on your own and just go ahead and get rabbit? So, anyways, yeah, the things you learn at Harvard, right? All right. Actually, the funniest thing I ever did at Harvard was we watched a 2-hour video on what it was like to be poor. I still think it's so funny. And then I approached the professor in the middle, actually in the elevator after break. She went down for coffee. I went out for coffee and I ran up to her. I'm like, actually, that was really funny. And she's like, what do you mean? I'm like, we just watched a 2-hour video on what it's like to be poor, like to be an average person. We had to watch this, like, so we could get it all straight. I said, there's a lot of humor in that. She didn't get it. Anyways, I still think it's funny, but okay, cool. So, Kiwi dollar. There are two things going on here, and that's the whole point. Do you know which one is which? Which one reality is? I don't. Both are reality, huh? So, and so let me use arrows to kind of make this point. Is it doing this? Uh-huh. Yeah. Yeah. Sure. It's definitely doing that. Okay, cool. I- Is it doing this? Yeah. It's definitely doing that too. Which one's right? They're both right. So what do I do? Buy or sell? Well, if you can't figure that out, you shouldn't be buying or selling. Okay. A good thing to remind yourself is you're trying to figure out what everyone else is doing. You're not trying to beat the market. Don't beat the market. Don't try to beat. Why would you want to beat the market? You want to ride the wave of money. There's no glory in picking tops and bottoms. And by the way, that strategy stinks. So you might as well be a trend trader, huh? So if you not sure what direction the trend is, that is a decision to be out of the market. Okay. Not being in a trade is a valid decision. Okay. Not trading is a trade. So don't look for trades, look for trends. Cool. All right. What do you think? Is it plausible this comes down? Yep. Okay. Does it exist on this chart? No. On a daily chart, this is a strong buy. Okay. What is not on this chart? Well, it's actually on this chart because I added it. That vertical line, and I have to move it now. This vertical line. Okay. That's the turning point that could appear in the market. If you look at 20 years of data, it's a big data set. This is kind of like can be a short-term peak in the market. Not that the whole market reverses, but very often down can show up, right? So here's the interesting thing. What else do we see? Let me delete that. Okay. We have to be cognizant of that top and we have to be okay. Sto- Stokes is not quite ready to be overbought. Hang on, let me add a little more time to this. Okay. And if you're using MACD, and again, this is on the daily, okay, this big move here, oh, it's just too fat. Hang on, let me thin this out a little bit. This move here corresponds with this move here. Perfect replication, right? Great. Then what? We get this and we get this. Perfect replication? No, not perfect replication. Um, the MACD, which is what we're measuring down here, is less bullish than price. How do you interpret this? What does it mean, Basel? What does it mean? There are less bulls. There are no bears, but there are less bulls. So, what would happen if a bear showed up suddenly? Well, why would they show up? Well, what if you knew that more often than not, over long periods of history, somewhere around now, bears do show up. But again, I have to restate this because that's not actually true. What actually happens is you get less bulls. We already have a thin herd. So what if another 50% just cash out and go to the Hamptons for the summer? Okay. Well, not up. Okay. So you could get this fizzle. So let's say you're thinking about that now. So you've already thought about that vertical line. And then you've already analyzed this and say, well, dude, we have a lot less bulls already. And then then we cross the seasonality line. And by the way, you can do your own research on QuantBox. Maybe this isn't the perfect pair. This is pound dollar. I'm just talking about the meaning of this pattern as a technician. See, with QuantBox, we have to go back and forth. We have to be economists, right? We have to be an analyst of the economy, but then we also have to be analysts of the market. And if you can put two together, both of those together and find congruency, you're probably going to end up being a decent investor, decent trader, right? Because you're only trading when the forces are aligned, and when they're not, um, you're trading crosspairs with Johnny, as he puts down there, crosspair season. Which means what he means by that is really just relative strength. You're looking for day trades based on what just happens to be. But we'll cover that in a second because that's an astute observation. So what I'm saying here, though, is if you put all that together and this double top holds the market, it should have extra weight than just a normal kind of setup. Okay. Okay, cool. So you wait for your Stokes. Okay. That kind of stuff. It'll be a very long time before you get a 2155 cross down on this daily. It'll take weeks, really, for that to happen. Okay. Okay. Oh, and just one other kind of thing now that I've seen this. This is also kind of normal price action. Okay. Ride the 21, drop to the 55, drop to the 200. This is the fair market value. And having it come back up and then double top kind of thing is also common. It's not like it's going to do that. I don't know if it's going to do that, but that is a common occurrence before reversal, that the market breaks all the moving averages, goes neutral, second attempt to try to make a higher high, it fails, and then of course then it collapses because then the bulls get out and maybe bears show up, right? So anyways, all right, just very quickly here, if we go to stock or currency indices, what Johnny's saying is when you're shooting at rabbits, because there's no long-term trend in play, don't even look for the trend. Is one strategy, right? What are you looking for? You don't really care what direction the buffalo move this time of year. If it's not through your part of the land, it doesn't matter, right? So you spend your time setting up traps, look for your rabbits. Okay, great. Um, and don't mess with badgers. Just go for rabbits. You're fine, right? Um, what you do is you look for the trade of the moment. Again, like a rabbit just kind of hopping around and he gets caught in your trap. It's just happened to be there at that moment. Hunting rabbit, you don't like walk through the forest with a spear looking for rabbits. No, you set up traps. Okay. So, what you're looking for here is what happens to be strong today, technically, what happens to be weak today. And how do you do that on QuantBox? This is a great way of doing it. Okay. So you can pick on what's working today or not working, but whatever's moving. So, like, the Japanese stock market is down, over a half a percent. Aussie dollar is down quite a bit. Okay. And it's expected to. So you might pick the things that both have congruency based on QuantBox score and what's actually happening. Now we're just saying, now you're just picking your flavors, right? Okay. So you could say, well, this is already bearish. Look at that seasonality coming, huh? Ooh la la. Looks like down coming. So anyway, so you might say, okay, well, this one is working today. It's already down 0.77. It's not a cross pair. Cross pairs are non-USD, non-yen. So you can find cross pairs in here. But another way, because you're only doing cross pairs because you're trying to match up strong versus weak. Well, this is actually working out. Not only do we have weak Aussie dollar, probably because of the bad China data, and a strong US dollar, probably because of two more rate increases by the Fed, and probably one coming up soon. So, and I would say on top of that, because usually that's just enough for a cross pair. If euro is strong today and Swissy is weak, you're going to buy it. Okay, that's it. You don't really care about the economics. Well, wouldn't you rather get that and have congruency with the economics? Yeah, even better. It's one more level, right? So you could go to that Aussie dollar now today, for example, and then go look for opportunities to trade that. Okay. Okay. And now it's range. So how do you trade a range? The proper way of trading a range is letting it break, catch the pullback. Okay. Okay. Doing this today is less ideal. But if you threw it in there where it's working and that technical trend fits inside your economic trend, the Australian economy versus the United States, you're like, dude, I'll take the US dollar all day, every day. Okay, cool. You can do it under these technical settings, these market conditions. It's a less ideal of a trade, but it could be done. It is logical. Okay. It's maybe less ideal, but it is logical. Now, what about these cross pairs? As Johnny said in the chat, where's my QuantBox? Okay. Again, you can see what's working using a scatter plot. So it'd be like euro versus pound. That's up but not expected. Okay. Euro versus Kiwi, up but not expected. So pound is weak. Okay. Kiwi is weak. You could pick something like that and say these are out of position, right? Here's the logic. They're up, but you would economically they're more likely to be bearish, but they're up today. Long-term bearish, short-term bullish. You see? So that could be and again, this is labeled. It's bullish, but unexpectedly bullish. So you're like, okay, and everything down here is bearish, but unexpectedly bearish. So you could trade the change, or you take a crossbear and you trade the expected. I always prefer the expected. I don't like to try to reverse a market. I want the market to reverse, and then I will react to that. So all day, every day, I would pick a pound Aussie, right? So you take a look, you go to the cross currency pairs, you take a look and get yourself settled mentally and emotionally of why you would be interested in buying this asset today. You're like, because it smells like rabbit. So, yeah, cool. You can see seasonally, somewhere around now, we get some up that lasts all the way to about September. Cool. Okay. Retail's heavily short. Uh huh. Okay. Institutional investors, 2/3 are long pound and 2/3 are short Aussie. Probably the same traders, right? So then I look at this and it doesn't look like a synthetic pair, meaning it's really a pound index versus an Aussie index. It's just interesting. Almost exactly the same amount of people long pound are actually short Aussies. So it seems real, sort of, right? So, anyway, so you look at all that. Look, it's been down and down and down and down and down and down and down for weeks and then flat So what do we do next? Talk to me, Goose. Well, we close the QB. We zip over and we do I have to like build this. Do I even have a pound Aussie? See, I typically don't trade cross pairs because I'm a trend trader. So if there's no trend, I typically stay away, but you can do this. So let me try to get the pound. That's, I guess, euro. Let's get rid of that. Do I have pound Aussie? Pound Aussie. There it is. Okay. So let me reset this. Let's go out to a 4 hour maybe. Let's take a longer term look. Cool. Where's the support? I'm going to look at it this way. Where's the swing? Let me drive in a little bit. Okay. And it seems to me we have the up, the down. Okay. Up. And then we're going to probably in this zone here look for a new up. So let me construct that quickly. I have to take my daily pivots and point them in the right directions. These are my biased pivots. I'm going to put it into bullish mode. Okay, boom, boom. Okay. So today's trade on this already, today's trade, I'm not talking about today's trade. I'm talking about tomorrow's trade, but the one that already happened was set up last week where you can see it's this price area. Okay. And someone's already taken this. It's just a slight new high. So tomorrow's trade, which we're setting up now, which you might be taking today. I mean, this is how a trader should be. You should always be ahead of right ahead of the game, setting up ambushes. So, anyways, this is how you would thread that needle. Okay, there's your rabbit. You're setting up your rabbit trap now. The thing is, you might be taking tomorrow's trade in the next 45 minutes. You're like, well, how can it be tomorrow's trade? Well, we're already done today's trade. And you're like, well, what are you talking about? Well, if you had done your work on Sunday and you were looking at this, you would have already known this is a buy and that this is a buy. And in fact, this lower one is a swing trade, not just a day trade. So that trade looks like this. Okay. That looks like that. But we know that is more not likely to happen in one day. That's why it's a swing trade. It takes several days. So the way you thread that narrative is there's the buy zone. There's today's target. We've already hit it. We've already respected it. People have already taken profit. It's already done. Monday's done. Now there's Tuesday's buy zone, Tuesday's target, probably down one more. We hit here on Wednesday at some point. And then what? Okay. An increase in probability of profit taking. Okay. So cool. So, anyways, that's that. And this could be probably even today, but it's based on tomorrow's expectation. Okay. Cool. So that's that. Thank you for being a subscriber to QuantBox. You will get a lot of emails from me today. I have to decide what order to send them. I have 18 updates. You've seen about 3 or 4 of them now, just as we go through. I have a lot of things that are locked that I'm going to unlock. So I don't know if I'm going to send 18 emails or what? 3 emails of 6 changes each. And you're like, dude, that's too many. So 6 emails with 3 changes. You're like, yeah, so you might get 6 emails with 3 changes, but I want to point you like there's just so much that if I just unlocked everything, you're like, oh my God, there's so much here, and then you it'll take forever to see the change. So I thought I would send you an email. And I'm like, for example, and I don't know if I'll do it today, but I'll probably around Wednesday. We'll look at the new updated version of the smart money tracker. And I'm like, look at all of this and all the little changes. And you'll look at them, and you're like, whoa. And I'll show you, and you're like, oh, that's cool. And you're like, oh, that's helpful. That's organized differently, right? So that's good. But then I'm going to show you two more things on the smart money tracker that doesn't exist right now. And so I'll show you those, and that'll take at least one email where I break it down and explain it piece by piece. So then you can log in, open it up the new version, and then you'll see all the changes in an organized fashion. Okay. So that's how I think it's going to go down. Okay. Most of the big changes are only available on the pro level. Just a heads up. It's a lot of development work. A lot. A lot went into this. And it, but many of the smaller stuff are also going to go on to the retail one as well. So um just remember, if you have the pro version, you get more and it's actually cheaper. So I need the commitment, right? That's all I'm asking for. So, anyways, peace on earth. May the pips be with you. May our profits be above average. Oh, let me turn my cam on so you see it. Peace, peace, peace on earth. May the pips be with you. May our profits be above average.